Action.
All right. So today, our learning goal is to determine how transactions change an accounting equation. And if you turn to page 19, we're going to go through a mastery problem 1-6. All right, everybody have page 19?
Yeah.
And everybody knows the accounting equation is assets equals liabilities plus owner's equity. So we're gonna go through this problem that has different assets, different liabilities, and a different owner's equity. We're gonna put them into our little chart here. And the left side is always gonna equal the right. So the assets is always gonna equal liabilities plus owner's equity. So we'll walk through this problem together. And at the end, we're going to know exactly how to determine determine how the transactions change in this sample problem. So 1-6. What's our first? What company do we have here?
We got
Dirk's company.
Health Free.
Dirk's company.
Nancy Dirks.
Where?
Yeah,
It's bottom of page 19. Then you flip the page,
1-6
page
mastery
20.
problem.
Correct?
Yeah, so it's
Mastery problem.
I thought.
All right. So under owner's equity, what should we? What company do we put underneath that?
Nancy Dirks Capital.
Yes, Nancy Dirks Capital, correct. All right, and what is our very first transaction?
Receive cash from owner as an investment, $350.
All right, very good. So, what? Where do we place that 350?
In the cash.
Cash.
and
In cash?
the
Owner
Dirks.
equity.
And
Owner's
on the other side, under owner's equity.
Mhm.
So 350 on the one side and 350 on the other. All right, excellent. Transaction number 2.
What does it say?
Awesome.
Bought supplies on account. Okay. $100.
Health Free
Accounts
Company,
receivable?
Health free company.
$100.
Yeah, so,
Do we?
yep,
put,
where does that $100 go?
Do we put the 100 in the Health Free Company and then in supplies, or I don't remember how to do it.
All right, if it's-
You bought supplies, I mean, when it's
If it's money that we owe,
You making accounts
then
receivable?
it's gonna go on the liability side, correct?
Yeah.
So we're buying supplies on account, so that's a debt that we're gonna owe later.
accounts payable.
So yeah, accounts payable. So under liabilities, once you put accounts payable, and let's put the name of the company that we're buying supplies on account from. And that's the Health Free Company, right?
Wouldn't it be Dirk's supply?
No?
See, that's why I said Health Free Company at first.
So if you look at number 2, it just says bought supplies on account from Health Free Company, $100.
Okay.
So we have $100 on account. And what about the asset side of the equation? Where do we put that $100?
In supplies?
Supplies, correct. Yep,
So we add in $100 to the account payable and then $100 to supplies?
yep,
That's
correct.
what I said, I thought I was
Yep.
wrong.
So bring down everything. So like the 350 cash that we started, bring that down into our new balance, right? And the owner's equity or owner's capital, you bring that down also. All right, let's look at transaction number 3.
Pay cash for insurance, $150.
All right,
So do we subtract the $150 from cash and then put it in the prepaid insurance?
that's right. You got it. So yeah, 150 comes out of your cash bank account, and then the prepaid insurance column receives $150. So what's our new cash balance now?
$200.
Yep. So subtract that and bring all the columns down so you have a new totals. Does your left side equal the right side?
Yes.
All right, very good. So we're on track. We're on track. So is everybody seeing how these transactions change the equation?
Yeah.
All right, good. All right, number 4.
Pay cash for supplies, $50. So do we subtract the $50 from the cash and then put $50 in supplies?
Yeah. All right, yep, very good. Subtract $150 from your bank account, and we add 50 into the supplies column. So how much cash do we have in our bank account right now?
150.
150? And how much supplies do we have?
150.
150. And how about prepaid insurance?
150.
And what is our accounts payable for Health-Free Company?
100.
So we still owe 100, and then the owner's equity is
Still 350.
350. So what are the totals on both sides of the equation?
450.
450 and 450. So we're doing it correctly because both sides are equal. All right, transaction number 5.
Receives cash from owner as an investment, $300.
All right, so
Check
an
out
owner investment, what
check
is
out owner's equity.
owner's equity? Yeah, correct.
You add
Wait,
it
so
on
you
it.
take that or you add
Take
it
it
to?
out. You take it out from owner's equity and put it into cash.
What?
Yeah, but it's owner's equity, we still have to account for it where it comes from. So the 350 is added into the owner's equity, because that's just more money the owner took out. And then you add it into your cash balance also.
Wait, so we taking the 300 out of owner's equity and then putting it in cash?
You're gonna add 300 into owner's equity,
Okay.
So you add?
Oh.
and you're gonna add 300 into your bank account.
Okay.
That's like the owner thought I need more money in my business because my bank account's a little low. So here, I'm gonna take some my own personal money and I'm going to put it into my bank account. So as accountants, we have to show where it comes from and where it went. So it came from the owner's pocket, that's why it's owner's equity, and it went into our bank account, which is our cash account. So what does our cash account look like now?
750? Oh, you mean altogether?
Yeah, what is it under cash?
Oh, 450.
450, right. So, and then what is the owner's equity total now?
650.
650. All right, so let's bring all the numbers down and make sure the left side of the equation equals the right.
Mm, 750.
How's it looking?
Good.
What is it?
750.
750 and 750. All right, very good. All right, transaction number 6.
Pay cash on account to Health-Free Company 75. So do we take the 75 out of the cash and then put it into accounts payable?
Correct. Yeah, very good. So we'll subtract 75 from the cash column,